Hi, this is Steve Dalton from AgVantage Commodities, bringing you another market update. Most people have been flat out harvesting at the moment and may have missed some disappointing but important news that I thought would be relevant to get out to you as soon as possible. I've received many calls since Tuesday, Melbourne Cup Day of this week, as to why markets have come off so much and to why they've come off to such an extent. And to put this in perspective, we brokered APH1 delivered Narrabri approximately 10 days ago at 330 delivered Narrabri. Today, bids for the same quality are 265 to 270. That's a fall of $60 to $65 in 10 days. So logically, I've been asked why. As I've been saying in previous weeks, I thought the market would rally on the back of protein shorts and domestic consumers holding off their buying until harvest. Then we would likely see harvest pressure, and that's certainly been the case. As we come out of the inverse drought market, so where the spot price is higher than the deferred price, so a few months ago the price was higher than it is today, we have seen the trade and the consumer short stocks, and they've obviously tried to wait as long as possible before covering in those purchases as harvest begins, hoping that the price would be cheaper. Then we saw weather delayed harvest, and then that created the lack of supply, so the market got bid up for a short period of time for a small amount of tonnes until those consumers got covered. So what we call that is generally a market squeeze or a short squeeze. Since then, the weather's improved and the market's become confident of the quality profile and that there is going to be large supplies of high protein wheat in northern New South Wales. When you couple this with the domestic market having to price wheat from being exported, and that's what we were primarily seeing. We were seeing high protein wheat coming off, and the domestic market had to buy that high protein wheat, which was better placed in the export market. But they had to buy that to stop it from being exported, so they also were supporting the bid price being higher. And again, that's helped drive that nearby short squeeze. This week we saw wheat harvest really ramp up, and that's resulted in the market simply realising that there's that much volume coming to the market at the moment, and there just isn't the appetite to buy all that in one go or over a few days or a week. So it's the classic case of simply being more sellers than buyers. If you spin the scenario around, what's happening is really the opposite of when prices rise, and growers would well and truly know when prices rise, sellers tend to stand by and watch the price continue to go higher. Well, the same scenario is happening, but the opposite way, as I said, that sellers are coming to the market every day and offering large volumes of grain. So the buyers are either standing aside with the view that the price will keep getting cheaper, or they just reduce their price each day and average their price down. What's important to consider is that Australian wheat is the cheapest wheat in the world. It's very export competitive at the moment, but that doesn't mean just because it's export competitive that the buyers aren't going to continue to reduce their bids if sellers keep offering it. So what's happening is the buyers overseas are constantly being offered wheat on a daily basis from local traders, so they too are standing aside and reducing their bids. So when you consider the amount of grain we need to export from New South Wales alone, you can see how this snowballs the market lower, and that's what's happening. The recent announcement that China will not buy Australian wheat, that spooked the market and created some concern, but look, largely that was expected to happen. That it's not as though it's shocked us that that's occurred. And China doesn't traditionally buy large quantities of wheat from Australia. That said, when you remove 1 million or 1.5 million tonnes from a country such as China or any country, if you remove that sort of demand in a year where we're having a large exportable surplus, that certainly isn't supportive to price rises. So the logical question is where to from here and what should you do? That's a difficult question to answer because it's going to be different for each individual seller. But I think that the market's going to continue to be pressured lower in the coming weeks as harvest moves south and more grain comes to market. Now, this is obviously going to force sellers to make some tough decisions. That is, how much do you sell for cash flow now and how much do you hold back? Now, this is obviously magnified coming off the back of a three-year dry spell where cash flow is pretty important for most people at the moment. So the answer is going to be very different for each seller, and that's part of the problem. In an ideal world, sellers will only release enough grain that match demand, but unfortunately markets just don't work in that way. Fundamentally, I still believe there is support for grains globally. And when I say there's support, that doesn't mean the price can't come lower though. But at the same time, you've got to look at where that support's coming from. And there's still question marks over the major producing regions of Europe, Black Sea, Russia, North and South America. The US is currently shipping soybeans and corn at a rate of knots, which is reducing the capacity to do other things. So if these production issues worsen, this will more than likely play out coming into the second and third quarter of 2021 as the Northern Hemisphere crops move into their flowering and then harvest phases. So whilst it's likely that prices won't get back to the recent highs in the next few months, there is a positive picture for price support through 2021. So if that's the case, and there's obviously still a reasonable amount of time to go between now and then, and markets these days with information the way it is can change in an hour, let alone a day, a week or a month or 3 to 6 months. So it's important that you continue to watch the market and understand the dynamics. As for now, I think the market has been sold off too quickly, but ultimately that will come down to how much the seller is willing to offer the market. So I would suggest that the only way to support our local prices is not to sell too much now and look to spread sales over 2021 whilst monitoring the market conditions and have a marketing plan in place. There's no real reason that the market should fall out of bed because our prices are competitive. What will cause it and continue to cause it, or what is causing it and will continue to cause it, is if we just keep offering on a daily basis, the market is going to get cheaper. That's just how it works. So lastly, I'd finish off by suggesting that sellers don't use online prices as gospel for where the market is. And the reason I say this is we've currently, the last couple of days, been achieving $20 premiums, $20 per tonne premiums over prices that are being shown online, for the lower grades especially. Not so much the high grades. I think that premium is done for the time being. But for grades like SFW, AGP, AUH, if you can get a $20 premium today versus the current advertised price, that's essentially a $20 rise straight away that you're going to have to wait for into the future if that was to occur. So, it's really, in times like this, it's really important to know where the opportunities are. So I'll finish off there. If you would like more information or any assistance, have any questions, please don't hesitate to call us. AgVantage Commodities 02 6792 2962, and wish you all the best for harvest.